Welcome back to Golden Rule Radio this week. At the tail end of last week's show, we talked about how excited we were to sort of sit on the sidelines and watch and see what develops. And here we are. Miles, why don't you take gold and run and let us know what's gone on in the last 7 days.
Yeah, we actually this week have seen a little bit of up and down in gold, 10, 15 bucks here and there. I think we ended up peaking out about 1340 over the last week, back down in the 1320s again. So we are stair-stepping back up towards that 1360 number. We do have a nice long-term trend line running under gold, possibly that we may hover again, started back in that December 12th, December 13th bottom that we had, and moving up from there. So I'd love to see gold continue to make progress here, pushing up to 1360, then obviously getting up to the number we talked about pretty extensively last week, 1375. We did have quite a bit of kicking around in the gold price today, at least for a few minutes, on some news that we're going to discuss here momentarily.
So despite intense volatility in the equities markets, gold and silver have been very, very stable, just sort of trading in this channel range. And I'm not going to put you on the spot and ask you to predict one way or the other, but what did silver do just kind of to that point?
Silver is still in that compressing pennant that we've been following for the last couple weeks. So we continue to see the sideways movement. However, that wasn't shocking. You know, a couple weeks ago, we talked about some correction moves in the dollar pushing back up. Obviously, the Dow had taken that gigantic fall, and it was going to correct back up some, although it seems that both of those have reverted back to their trend with the dollar now pushing down, the Dow not really finding any legitimate footing, and we've been seeing commodities pushing up, which will probably be helped at least for U.S. pricing on commodities with some of these tariffs and the tariff news that's coming out this week. So I would expect silver, platinum, palladium to follow suit. That's not saying that we couldn't see gold down at 1285, 1290. We couldn't see silver push down a little further as it's more to the middle and top of its compressing channel. Platinum is near the top of its compressing channel, and obviously palladium is still within $100 of the highest price pretty much ever.
The U.S. dollar weakness does surprise me, honestly, with some of the things that we've seen develop. I had a lot of calls yesterday. Why is gold up $20? Why is silver up 40 cents? You know, that was a 1.5% move on gold, a 2.5% move on silver. And I was sort of optimistic that we are going to start to see the beginnings of, with all the inflation talk, silver starting to narrow that gap on the ratio. It really hasn't. We're still sitting between 79 and 80. So stagnant there. Stagnant not only in the metals in that channel. We're having a real hard time breaking above 17 with silver. And we are having a lot of resistance at 2730 on the S&P, for example, right? So even when things try to go up, there's just not a lot of trust. There's a lot of uncertainty, a lot of instability, and yet gold and silver buying have picked up aggressively, especially in IRA accounts, because of the fact that the sense is that uncertainty is leading to a probable negative outcome.
So, Tori, you know, you mentioned the dollar. The dollar we thought would get a little higher than it did, and it seemed to stop even shy of 91.
Yeah.
So that's certainly negative. We talked about volatility index the last couple weeks, the stock market crashing down here. You mentioned some client conversations that obviously we've all around the office had over the last week. So the question is sentiment shifting?
I don't know if sentiment is shifting as much as concern is growing. What we're really seeing is people paying far more attention to the metals prices, far more attention to the Dow and the S&P, for example, especially in a week like last week where you had a 1,500-point drop. It should be expected that people pay closer attention to the markets in general. So yes, I think that we are getting increased calls from the standpoint of interest, inquiry, concern, again, lack of direction.
Yeah, I'd agree, and I'm still waiting for that moment that the mainstream media is plastering it all over the television. I mean, both you and I remember 08, 09, 2010, when you actually should have probably been stepping out part of your metals position and looking towards moving a portion back into the equities market down at 6,600 on the Dow. That's when MSNBC was telling everybody consumer sentiment was, 98% on the price of gold going higher than 2,000. So I agree. I think it's measured. I think we're starting to see a number of people, especially in retirement accounts, who are looking at their long-term money, looking at their IRA assets, and thinking we may have some volatility in the short term. We're talking about long-term assets, 5, 10, 20 years down the road. So to diversify some of your longer-term investments into something that's a longer-term asset, like precious metals, a lot of people, I think, are leaning that direction right now because of this uncertainty that we've been talking about.
And that's exactly what I mean by the IRA conversations. It's that larger portion of the portfolio. It's the bigger picture, right? It's the macro approach, longer term monies. Let's not forget that in 2001, this bull market actually began. Okay, so from 2001 to 2006, it got little to no attention. Just like what we're seeing now. We've had 2 years in a row where gold and silver now have increased by over 20% each. Totally off the radar of the mainstream media, just like gold was up until about 2007. Then they started paying attention. Actually, the mainstream media was doing our job for us and increasing awareness as to the need for physical precious metals in your portfolio. Will we start to see that again now? I do believe that that's right around the corner. Gold averaged over 20% returns a year for 10 years. Obviously, we had 5 years of negative returns or lackluster performance, if you will, but that's not what it's intended to necessarily do either. It's protecting you. It's a portfolio hedge. We're getting back to the point where, yeah, we will see great numbers from a return or nominal value standpoint. So a lot of portfolio protection going on right now. At least the discussions have begun.
Well, and following some of the strategies we try to employ here at ICA, a lot of the things we do take nominal value out of the equation. When you start looking at swap ratios and trading asset valuations over time based on how they price against each other, a lot of the things we talk to our clients about. So there are great strategies that you can employ within a precious metals market, within a lot of commodities. It's harder to do in the equities market, but it's pretty easy to do with commodities that you can take physical ownership of, that give you a lot of flexibility regardless of the direction the nominal value is going.
That's such a great point because prices are great right now. Spot prices, I don't think any of us would argue that this is a great entry level point. That's not necessarily what's driving our recommendation. Our recommendation is based on the value. I sent out an email last week to my clients pointing out the premium histories on the double eagles. Okay, you may look at it and say, well, gold is up, 15% in the last 12 months. That's not what matters. The premiums are so low that you take advantage of value. So it's a silver recommendation right now. It's a platinum recommendation right now. It's a double eagle recommendation right now because of value, whether it's ratio or premium.
So expanding out from our precious metals to really what may end up being all commodities. Obviously big in the news this week, Gary Cohn stepping down and discussion about tariffs starting with the steel and aluminum industries and then obviously branching out from there. Tori, what are some of the pros and cons we can expect to see, not just in the precious metals industry that we deal in and how that may be affected, but also industry as a whole, production, mining? Real quick, because I know every TV show in America is covering this right now, but from our standpoint, what are some of the things we think we might see in our industries that affect us?
I think you're on the verge of seeing higher commodities prices anyway. The Fed is openly stating that they're concerned about inflation. So get ready for it either way. Are they going to blame it on tariffs? Probably. But the fact is they've been printing money like crazy. Quantitative easing in the European Union, with the Federal Reserve here in the United States, the EU just topped 4.5 trillion euros on their balance sheet by buying bonds. He shows no signs of slowing down. It's over 40% of European GDP. Yeah, we have 4.5 trillion on our Federal Reserve balance sheet. That should scare the daylights out of you. At least it only represents 22% of U.S. GDP. But let's look at the pros and cons of Cohn leaving. Okay, pro is, look, if you're a conservative and you want Trump to continue in these trade directions, then you just got a big win. Cohn is a lifetime Democrat. He's a Goldman Sachs crony, and the fact of the matter is he was going to be at odds and has been at odds with Trump all along. So I kind of look at that as a win.
Well, and here's my question on that. If you were a lifetime Democrat and you had the financial and fiscal ear of a pretty conservative right-wing president, why would you take your ball and go home because something doesn't go your way in that first year? on a grander scale of things, I wonder how much of this actually has to do with specifically the steel and aluminum industries, and not just more political gamesmanship, both here domestically in the U.S., building relations with some of these Rust Belt states, and the relationship with, as a whole, some of the pretty horrific trade deals the United States has signed over the last 10, 20 years with Europe, with Asia, with South America.
Canada and Mexico.
With Canada and Mexico.
It goes on and on.
So how much of this actually has to do with steel and aluminum industries? I mean, the majority of U.S. steel we use is already produced here in the United States.
This is no different than the geopolitical discussions that we see with North Korea, for example, on nuclear arms, right? There's a lot going on this week that way too. They're saying that they'll hold off on all testing, and we'll see what transpires. But Miles, to your point, this is political gamesmanship, right? One, it's campaign promises being fulfilled, but two, this is an opportunity for the rest of the world to know that he is serious. And when he says that he's serious, this is a pretty harmless way to fire the first shot across the bow. It's well within the trade partners' capabilities to make trade more favorable for the United States. It doesn't have to go this direction.
Well, the good news is your refrigerator will be slightly more expensive. However, the better news is it might be made right here in the US of A.
Well, the other thing is, too, bourbon and blue jeans are going to get more expensive in Europe, right? Brussels comes out and says, well, we can play that game, too. So get ready, again, for the political gamesmanship. They've got a leaked list of things that they'll go after, and trust me, it's going to target conservative state manufactured goods. They're going after the Paul Ryans and the Mitch McConnells if this goes through.
Well, and a message to all the liberals out there, you wanted American citizens to earn higher wages. This is the only way to convince companies to do it, is you have to bring the business back here, and you have to force them to pay our U.S. citizens a higher wage than they could get away with paying over in places like China and Taiwan, where labor is much, much cheaper.
Well, you see China not only producing, but using almost 50% of the commodities in the world: cement, steel, copper, right? So how do you continue to go on being non-competitive with an economy such as that? So again, gamesmanship, yeah. Message sent. We'll see what transpires. We'll see how the markets react. We're, again, on the sidelines, anxious to see how things go with the equities markets. Do we finally get some stability, or do we finally get the washout we've been waiting for? Watching the metals markets, do we finally break above that resistance point that Miles pointed out at the beginning of the show, or do we crash down below and fail to see support hold?
So the question is, could this snowball out of control past the bourbon and blue jeans, past the steel and aluminum cans, into something a little bit more severe that could end up out of control?
I think it could, only if Trump responds in kind to anything that Brussels fires back. So as long as it's innocent, isolated to specific aspects of the economy, fine, no big deal. If he fires back with something bigger and they fire back, yes, I just don't think that's where the world economy wants to go right now. Well, we're going to wrap this week's show up. We appreciate you listening. As always, we would love to have a one-on-one consultation with you. Call us at 1-800-525-9556.
You can also stop by our website, McIlvaneyICA.com. As always, take that right hand, move that mouse up towards the subscribe button, click subscribe, and ring that bell to get notifications every week for new shows.
And you can follow us on Twitter as well at ICA Gold.
Thanks for listening.
Have a great week.